China has called on its biggest state-owned companies to play a bigger role in Hong Kong. Reuters news agency said that the call was made as protests continue to rattle Hong Kong. Now, the measures that Chinese state companies could take include ramping up investment in industries such as tourism and real estate and creating jobs and stabilizing the financial markets. The state firms could also exert more control of Hong Kong companies with more decision-making power rather than just holding stakes in those companies. Now, that call reportedly came as China's biggest state-owned companies met in Shenzhen just this week. As tensions run high in Hong Kong amid weeks of protests, the city's flag carrier Cathay Pacific and subway operator MTR, they have both faced pressure to harden their stance against the protests. Now, Hong Kong has long been a global financial center, attracting foreign investment, including from Chinese enterprises that seek to take advantage of Hong Kong's more autonomous and flexible economy. Of the 96 Chinese state-owned enterprises that are overseen by the State-Owned Assets Supervision and Administration Commission, 3 of them are headquartered in Hong Kong, while 50 have at least one subsidiary on the Stock Exchange of Hong Kong. Also of note, 8 of the 10 largest IPOs raised by Hong Kong-listed firms since 1986, they are Chinese state-owned companies. Now, for more on this story, Ross Feingold, he is Asia Political Risk Analyst, joins us now from Taipei. Ross, what sort of impact will a more visible Chinese role in Hong Kong companies have on the city as an international finance center?
Well, as far as the financial markets are concerned, greater participation by Chinese companies, whether as investors or listing on the stock market, obviously it makes the financial market more vibrant. That would solidify Hong Kong's status as one of the leading financial markets in the world, which of course is going to suffer amid the protests. And it would create jobs in the financial industry, and it would maintain global investor interest in Hong Kong as a hub for financial services, or a place, for example, as you discussed, for companies to list their shares, not just companies from China, or companies based in Hong Kong, but companies from other parts of the world which have periodically looked to Hong Kong as a place to list because there was a very deep and vibrant stock market.
So it could have, if I hear you correctly, a type of positive impact almost. But if they heed this call to action, Ross, how could these big Chinese state-owned companies exert more control? How could they better manage those Hong Kong companies?
Well, typically when they list in Hong Kong or participate in the financial markets in Hong Kong, I mean, there is some segregation from the Hong Kong economy in the sense that they're just utilizing the financial market. If they want to be more direct investors in Hong Kong, which is probably what the Chinese government is hoping for as well, then we would see a more visible presence, whether it's constructing residential or office projects or being involved more directly in the economy as far as it impacts the average person in Hong Kong, the average consumer, for example, the person who rents or owns property. So that's something that the authorities in China, as well as the state-owned companies, have to figure out, and probably have to be very careful about because there's some public perception and public relation risk as well.
So what we know of this meeting, Ross, is that it very likely took place. We do know that there were certain senior representatives who were there. But how do you think these changes, how would you anticipate them to be received by both the public and the private sectors going forward?
Well, that's the public relations risk that I mentioned in the previous question. That if Hong Kong people, who obviously many of them are not very happy with the central government at present, or with Chinese companies, or with Chinese tourists and visitors to Hong Kong, if they see a more visible role, if Chinese companies' names are on high-profile residential or office construction projects, or if their billboards are seen with greater frequency all over Hong Kong, then of course there's a risk that it'll anger the public or just inflame passions even more. So that kind of direct involvement in the economy has to be managed very carefully, and it's very different from simply listing Chinese companies on the stock market or investment funds from the mainland participating with a greater activity or quantity or investment dollars in the stock markets of Hong Kong. So it's two different things, and again, the Chinese authorities and the state-owned enterprises have to manage that very carefully because there is a risk for a public backlash.
It will all depend on how this is managed going forward, of course, and what we know as well is that it might mean more investment from those big state-owned enterprises into Hong Kong. What do you think the reaction from the international community is going to be about this?
It's an excellent question because on the one hand, we hear a lot of talk about multinational companies or their senior staff possibly departing Hong Kong amid the protests. A lot of talk about relocation to Singapore as a great place to have a regional Asia-Pacific headquarters for multinational corporations, also as a great location for high net worth individuals to access financial services. So to the extent that there is investment, a large amount of investment from Chinese companies that does have a positive impact on the financial markets or on the overall economy, it might go a long way to stopping some of the outflow by other international investors because they'll have no choice. They'll have to be there. If Hong Kong does start to return to positive growth, if a lot of Chinese companies are listing again, new listings on the stock market in Hong Kong, then international financial institutions, whether it's providing services such as investment banks or investors such as unit trusts, hedge funds, they'll have to be there. And similarly, multinational corporations will need to continue to be there. So it'll definitely have a bit of a magnetic effect in that it will continue to draw the international investor or multinational corporations into Hong Kong. So one can understand the strategic thinking behind the call by the Chinese authorities.
Ross, thank you very much for your insights into this. That was Ross Feingold, the Asia Political Risk Analyst, speaking to us from Taipei.